So what whenever you guys have a question, please feel free to ask. Maybe you can voice it out, or maybe you can put that in the chat, because most importantly, the purpose of this session is to get an overview about the insurance industry, and also what's the analytics role in insurance industry, right? So uh, Indira, can you share the deck, please?
Can you see the screen?
Yes, yes. Can you make it full screen? Right. Shall we move to the first slide? This is the overview that I mentioned before. So let's start with what is insurance. I think um, let's take a example in a different domain. Let's take retail. Let's say you are working on a supermarket chain. So there, I think what we need to do is, as a business, right? So they have a product, like for example, let's say milk powder, beverages like Coca-Cola, Pepsi, or whatever, that will be in the shelf itself. You will be picking the items and you will be paying, right? So it's actually a product implemented and you can use it. Um, Either it's a food, either it's a grocery item, whatever, right? So you will be paying, you will be getting that item physically, and you can go home and enjoy the item, right? When it comes to the insurance, it's slightly different because of the exact definition of life insurance is it's a financial contract between an individual and the insurer, right? So what happens is when you have kind of a serious illness, or let's say you have a cause of death, the insurance will pay a lump sum amount. Like this is the general definition of insurance, at least life insurance, right? And like I mentioned, it is a contract, right? Contract is just a paper. So you are paying something uh, for a contract. I mean, of course, paper is visible, but product is invisible, right? So that is why I think it is really difficult uh, to understand what exactly insurance means. Even people trying to sell insurance policies, they are having a really hard time to convince what is exactly this means. So, if you take like a simple example, let's say you are applying, so let's say customer is interested in an insurance, life insurance product, like someone, agent will come to the customer and do necessaries, and some like key things that they will be discussing. The one key component of that is we call premium. Premium is like, if you take that retail example as a retail example that I took before, let's say you are paying, you want to buy let's say a beverage, right? So whatever the MRP has mentioned is the amount that you need to pay. But when it comes to the insurance, we call it premium. So premium is actually calculated in a different manner than typical, let's say, retail product or beverage product, whatever. So the way that it has been calculated is based on your risk, based on your the duration, based on your the total cover that you will require, and etc. There are like a lot of components that it will take into consideration when it calculating the premium. So premium is the amount that you need to pay in order to make sure the contract is still valid as of today, right? So it could be monthly, it could be annually, half year, whatever the frequency method can be decided. But the bottom line is, um, if you want to make sure that your contract is still valid, you need to pay this particular amount, right? So and if that's like, if the particular policy is live only, or it is still valid as of today, so which means you have been paying the premium consistently as of today, then only you can enjoy the benefit of the policy or the contract that you have been signed with the insurer. So the second one is policy. Of course, I have mentioned this thing. So the contract that you will be having with the insurer, we call a policy. So policy will contain all the terms and condition and all the benefit, how you can get it and etc. Everything will be mentioned there. It's a very big document, honestly. So I mean, once let's say you get an insurance, you can read everything because there are like a lot of terms and condition, what the benefit that you can get, what are the benefit that you can't get, etc., etc. Then there's something called a coverage. Coverage means like so, like I mentioned, when you are applying for an insurance, so there will be certain criteria that we'll be looking at, as of like if in the course of death, how much money you will be requiring, right? So it could be 10 million, 15 million, 20 million, etc., etc. Based on that particular slab, your premium going to be vary. Also, like if you have an illness or if you admitted to the hospital, how much money that the hospital, sorry, you can uh, get it from the insurance company. All of these things will be, will be the component that you need to consider in the coverage. So then the another component we call claim. Claim means, so if something happens and if it is in your coverage in the policy document, you can apply for a claim. For example, let's say I have in an insurance and I have a, let's say, illness. So I need to I might need to have an surgery, right? So if that particular surgery falls under the contract, the contract that you have uh, uh, under your insurance, that is your policy. If you have that, what you can do is you can use a particular insurance and you can claim it, right? So for example, it takes, let's say it took 5 million, you can apply or you can either insurance company will directly pay, which means you don't need to pay and uh, you don't need to pay and then reimburse, but there are certain cases you need to pay and you need to reimburse. Either way, if that is in the contract, the insurance company has no hesitation, he will pay, right? Now, let's move to the next slide, right? So now you have like a general idea, like what is exactly insurance means, and and I'm not going to talk about why it is important, because I'm not going to sell an insurance here, right? So I'm just saying the concept. So the next one is now what. So why again? I would like to take a moment here and just explain why I'm telling this, right? So when it comes to the analytics, so any let's say analytical problem you are trying to solve, first of all, the most important thing I would say is the domain understanding, right? So that is why I've started like now the maybe the problem that you will be getting related to insurance. I'm thinking that is why you're having this conversation. So you need to understand what exactly this particular domain means from the business perspective and from the customer perspective, right? So now if you look at the operational process that insurance company has, so this is very high level. We have broken down this into 5 pieces, right? So first of all, now again I'm taking the retail example, right? So when customer visit to the supermarket, or when particular customer requires something, they will visit to the supermarket, right? For example, let's say I'm out of milk powder, then I'll go to the supermarket and I purchase it. So the requirement and need is there. But if you look at insurance, I mean, people not going to die if they don't have insurance, right? And let's say, but if I don't have food, I eventually die because it is something that is really required me to survive, right? But insurance is something that people think that it is not a necessity to have, but actually it's the other way, because it is really necessary to have, if because you need to always account for the risk of life, because the uncertainty associated with the life. But now the thing is, now not most of the majority of the customer, I would say 99.9% of the customer will not come to the insurance company. Hey, this particular I need required a cover for my life, right? It's not the case. So because people, first thing is first, people are not educated enough to understand, okay, insurance is something really important thing to have. Then the problem is now insurer need to go to the customer and make sure that tell, okay, we have a product like this, we have a contract like this. If you do this, these are the sort of benefit that you'll be getting, and this is why it is required, etc. Right? So which means insurer need to go to the customer. So we call it lead generation, which means you need to identify, okay, if I need to talk to a customer, like you can't go after every customer, right? You need to understand like certain cohort that, okay, this is the set of customers that I'll be communicating, because you see the potential, you see it is easy to not sell, but I'd say make sure that they will understand, etc. So we call it lead generation. For example, let's say you are running a medical, let's say medical center, free medical center, you'll let's say eye care and basic blood report and test, etc. So you can run such a event like that. Then from that you can collect uh, customer information. You can talk to the customer and identify, like, okay, certain cohort customers, okay, these are the cohort of customers I'll be pursuing. So then once you have that one, then what you need to do is you need to talk to the customer. Hey, I met you this particular day, so we have discussed. So then it's kind of an interview with the customer. Say, I would like to, introduce this particular product to you. Then it come to, once you have this interview with the customer, then what will happen is you will try to understand, okay, whether customer actually has a requirement for the insurance, right? So maybe we call it as financial need analysis. So there, what the agent, so whoever you go to the customer and trying to introduce the product, we call that particular person as agent. Agent will agent will have a solid discussion with the customer, to make sure where the in life stage where the particular customer is, or the potential customer is, and what are the health things that they have. Also, like about the family, how they are doing with the kids in their family, and etc, etc. Based on all these things into the consideration, they will create a financial need analysis with the customer. Then once the agent does that with the customer, then based on the requirement or the things that particular customer is required, and based on the customer's salary and everything, so the agent will prepare a quotation. Okay, this is kind of the recommended quotation or the policy contract that you need to have. So this is a stage where customer and the agent go back and forth, to fine tune whatever the things included in the coverage and etc. So, but eventually this is the high level cover that they are going to have. Then finally, that it will be converted into a policy as soon as customers pays the first premium. Premium is, like I mentioned, is the amount that you need to pay based on a fixed frequency. So this is sort of overall operational process. I mean, at least from the like selling insurance to converting a customer. So there are other things, how a product has been created, how we price particular insurance package and etc. So there are like a lot of other stuff. But if you look at from customer interaction point of view, so at least up to selling a particular insurance contract, this is the flow, right? So there are other operation processes also, right? So how when customer claiming, right? And also there will be other hidden processes also. When, let's say, you are doing a financial need analysis, you need to identify the risk, right? Because now again, it's a service, but also insurance company required to profit from it, right? Otherwise they can't sustain, right? So insurance is nothing but like pool of risk. Like you have a pool of customers, and there will be certain customers that you need to have, you require to pay for claims and etc. But if you look at the pool of customers, together, if you look at like the entire pool of customer will be making a profit. But if you isolate particular customer, you might not make a profit because the claim amount that you are going to pay for that the customer is much more higher compared to the investment that customer or the premium that customer is going to pay for the insurance, right? So, but insurance is always looking at the bigger picture. It's like looking at all of the customers, right? So this is very high level. The operational process as of from starting to interacting with the customer to selling a policy. Okay, now if we moving to the next one. Now, if we look at like again, these all of these things going to be directly related to the maybe the problem, right? Once you get the problem, you'll understand it. Where these components going to be important, or the understanding that you are having today is going to be important. Now, if we move to the next slide, so this is a sort of typical hierarchy that insurance company has. Again, this is again up to the up to certain process, as in up to selling a policy, or how up to where the insurance company or insurer interact with the customer, right? So we have insurance company, then we have people called provincial managers, then we have zonal managers, then we have regional managers, then we have team lead and agents. Now, why this hierarchy is important is there will be certain roles actually, and team lead, these guys are not in permanent card, right? So they work on commission basis, right? So if they sell policies, they will get a commission from that particular policies that eventually become their salary. And if the customer keep on paying for the contract they are selling, again, they will be getting a commission out of that policy. That will be a part of their salary, right? So the salary has like few component associated with it, but in theory, if you sell a good policy and customers keep paying on that particular policy up to, let's say, 2 or 3 years, the agent who sold the policy will be getting a commission out of that, the premium that they are paying. Again, if customer if customer sells a new policy, there will be like certain uh, commission associated to that particular that particular sale, right? So these are the two main components, right? So now what you need to understand is the difficulty of sustain the business, or the difficulty of sustaining this particular business completely lies on the agents, right? Why? Because these are the agents who are not in the permanent card, so the amount of pressure that you can apply to in order to sell in the policy is very less. So if the agent has the drive to sell the policies, that's okay. If the agent does not have the drive to sell the policies, that's the problem, right? Because I can easily make, I mean, these agent, I mean, since we know the insurance industry, you can earn unlimited amount of money as an agent. You can either make 0 rupees from the being an agent, or you can, let's say, make 10 million per month being an agent. So I mean, the amount is that vast, right? Because the more the more you sell, the more money you will be getting. And so it is a game between the motivation, right? So if the agent has the motivation in order to selling and earning, then it's a easy game. But what we have noticed in this particular industries, the consistency does not lies with agent, right? So normally we know, like, if take, let's say again, retail as a example, right? So we know how much sales they are making on an average for a particular month. Then we know what sort of the seasonal cycles that they are having, and etc. But when it comes to the insurance, it's not like that. If it's very inconsistent in terms of selling, because it doesn't have like, okay, suddenly I wake up, I am an agent, I wake up in the morning, say, okay, I'm going to sell 2 3 policies today. They will connect with the customers that they know, and they do all of these things and make sure that they will be selling policy. But if I don't wake up in the morning, say I'm not going to work today and etc., then it's going to be really difficult, because there's no one is there to monitor, right? So it's a game of make sure that agent have that same level of motivation when it comes to the selling. So that is why this has become a really difficult industry. And the other part is that people are not educated enough in order to make sure that this is a really important thing in their life, right? If you look at any other country, like especially Western countries, so insurance is must-have thing for them. But in Sri Lanka, it's not like that. And if you look at the global market versus Sri Lankan market, Sri Lankan market is actually way below the international market. It's simply because of the people are not educated enough to understand the importance of insurance. So having said that, if you move to the next slide. Right. Now, so what we are trying to do here is we are trying to give now we talk about what's the domain, what's the policy, how we are selling policies, and who are the people selling these policies, and what's the company hierarchy and all. Now let's start it into a different chapter called like role in analytics in insurance, right? So now how we can apply the theories in analytics in insurance, make sure that insurance company benefit out of that. So for this one, we'll take a simple example, because I mean, we can cover like a lot of analytics projects that we can do. Rather than going to do that, let's focus on one example that we have been implemented for one of Sri Lankan biggest insurer, and then we'll see what are the other opportunities that we can have. In order to do this particular part, I'll introduce Indeera Weerasinghe. He's a data scientist at OCTAVE, and he'll be conducting the session from going forward. Thank you. But if you have any question as of now, one thing that you can do is either you can put this in the chat or you can voice it out. We will be answering those questions. So.
Thank you, Ruwan. So, in the first part of the session, Ruwan introduced about you what's the insurance and what's the process behind the insurance, and how is the hierarchy maintained, how the governance structure and all the maintaining the insurance domain. So now we are going to see if there is a particular problem they are facing, as example, for the insurance industry, right? So we are taking it as example for the lapse prevention. We are taking that as a use case to going with you through the what I will give you the overall idea about the different steps what we are doing in the stage, each steps. So when we are talking about this lapse prevention analytics use case, the first thing you have a doubt about what's that mean the lapse? What's the lapse mean? They are talking about the lapse prevention use case. What this lapse mean? So lapse simply means, think about the earlier Ruwan explained about the policy. What's the policy and no? Think about he explained about you the premium as well. There's for a particular policy, there's a given due date. It means for that particular policy, there is a due date. So from that due date, after the in this picture you can see, if we are taking as example that particular policy due date is 2025, 1st of March. So after 1 month, it means the 2025 April purpose, that period we are saying it's a grace period of that policy. After the grace period, it means after the 1 month of that particular due date, we are saying that particular policy is lapse. Right? So after the 1 month of the due date, we are saying that particular policy is going to lapse. So this is the problem there. The business have a problem. They have a high lapse rate of the policy base what they have, right? So that's the pain point of the business. So using that pain point, they already have a problem. Using that they have a problem, how we create the analytical solution for this problem, right? We divided that into the 4 steps. The first step is the understanding the business problem. So what you have to, in the first step, what you have to do is you identify the problem and you have to take calls with the BU, you need to more understand about their problem. Otherwise, you can't resolve that problem without any understanding about the business problem. So first thing, you have to ask some questions and have to get together with them and understand what's the business process and all behind it. So for this understanding method, as a data scientist, you can use some frameworks like smart frameworks and the W5H methods to ask those questions, right? So after you understanding the problem clearly, then you can move to create the analytical solution for that given problem. So how we resolve this problem, right? So now we identify the problem, okay, and we are clearly identify the problem. Now we are going to solve using the analytics, right? So what's the problem they have? They are having a high lapse rate. So simply, if we can identify the beginning of the month, what are the policies going to lapse end of the month, right? Then we can take several interventions to prevent those policies. So how we identify this? So if we can do this, then it's a benefit for the business, because the beginning of the month we identify these are the set of the policies going to lapse end of the month, right? So how we identify these policies beginning of the month? Then you can use some statistical techniques and the machine learning models, right? Using these analytical methods, you can identify these are the set of the policies going to lapse end of the month. If you can identify that, then you have to plan. As example, so to identify these policies, if you are training a model, right? So you can use several features. We can see what's the payment behavior of that policy, and what is the policy related data. If you have the policy related data to that particular policies, you can use those features to predict the what are set of policies going to lapse. And you can use some customer related data, because that particular policy attached to a customer, right? So using that several features we are going to develop a model to identify what are the set of the policies going to lapse end of the month. As example, if we identify those policies, then we have to think how we prevent those policies without it's moving to the lapse. So next step is to how we plan those interventions, because you have to plan that. You have to connect with your BU according to their experience and what are the current processes they are doing to prevent the lapse and all. So using those features, you can plan your interventions. As example, from this lapse prevention use case, so we identify from the model, we identify these are the set of policies. As example, if you are predicting using the machine learning or machine learning, if you are predicting these are the so if you can identify the probability of that policies can be lapsed, then how we plan the intervention. So in the lapse prevention use case, we are planning we are bucketing the set of policies according to the machine learning model, the probability we are getting that, then we are bucketing it into the several buckets. Then we are using the premium as well. from that premium and the bucket you have in the after the prediction, then you can, according to the several buckets, you can plan interventions. What are some of the interventions we can plan? So the first person that that policy holder can connect it with the agent. Agent can connect with that customer, give a call or a meetup, something like that. According to that, the risk that policy have, we can plan several interventions to prevent that policy. Right? After we plan everything what we have, so after we plan the interventions to prevent those policies, then to prove the value, to prove the business, okay, if we are implement this use case, this will work, right? To show the value, what's the value you gain, right? So we have to conduct a pilot, right? How we do the pilot? So from that lapse prevention use case, we identify the set of features, the S group, and set of regions to the control group, and it's a balanced group. It's statistically balanced test and control. We use several methods to the balance two cohorts. So then from the policy level, we are showing them, okay, this is the uplift compared to the control. This is the uplift we are getting from the use case, and from the premium perspective, we can calculate what is the value we are generated from this use case. Likewise, this is the one of the analytical solution we are created under the insurance domain. So it's a lapse prevention use case. We identify what's the pain point they have, and we clearly identify the understand the problem, and we created the solution to how to identify these set of policies who are going to lapse beginning of the month. Then after we created our predicting model, how we plan the intervention. Okay, we know what's the risk, what's the probability they are going to lapse. How we use that probability smart to prevent that policies. So that's coming under the intervention planning. Then we have to prove the value. We have to show that, okay, if you are implementing this use case, this is the value you are generating. So to prove that, we are designing the pilot. So these are the steps under the lapse prevention use case. So then we will see the Ruwan talk about the process behind the operational process behind the use case. So if you clearly understand this process behind the insurance, if you understand that, then you can easily understand what are the potential use cases. As example, if you are getting about the lead generation process, so we can do some analytical use case to identify who are the potential customers we need to pitch. It's an analytical use case. We are identify potential customer and the financial need analysis.
Indeera, I think you broke up for 30 seconds.
Can you hear me now?
Yeah, we can hear you now, but last 30 seconds, I think.
So from the business operational process, we can identify what are the potential use case we can implement. So as example, for the lead generation, if we can create a analytical solution to how we identify the potential customers we need to pitch. It's an analytical use case. It's a problem they have. You can simply solve that problem using analytics. So if you are taking that financial need analysis, how they define the premium, what are the set of features, and not, then you can develop a model to predict what is the, if we identify these are set of features for that customer, then what's the premium you can decide. It's from the underwriting process. You can define you can identify it as they have a problem to they have the problem to identify the what's the correct, what's the most accurate premium for that particular policy. Then it's a problem for them. Then you can develop analytical use case. And the agent. So Ruwan talked about when he talked about the hierarchy, he talked about the agents as well. So agents, they are the first person. They are the people who took the businesses for the company. So how we improve them, how we increase their quotation, how we increase their activity, and it's an analytical use case. You can use some mathematical or statistical models to predict those things. If you are really, I'm saying, if you understand the operational process of the business the behind, it's then you can identify what are the pain points, what are the problems they have. Then it's a simply analytical use case. These are the set of the things we plan to discuss.
Yeah, just a few things to add. Like, Indeera, can you go to the last slide that you have explained about the project, right? So, I think Indeera touched base on few things, but I'll do a recap of that, right? So, I mean, when it in the university, you will mostly get is a very straightforward question. Okay, you need to fit a regression. You need to predict this particular, let's say, sale of a particular company, etc., etc. So you will the problem is given. And you will know like, okay, you need to apply irrigation and whatnot, right? But when it comes to the actual industry, what will happen is people sometimes have a concern or people sometimes have a observation. For example, the main observation that business had about this particular project was we didn't know like, okay, whether it's called observation or not. They came up with an observation, say, hey, problem. One of the observation that we had was the number of policies that they are the number of policies um, getting lapsed in every month. It has it is slightly higher compared to the market. So now if we look at this one, then what we need to do as analytical companies to, first of all, we need to observe the we need to first of all investigate the observation that they're having, okay, whether the claim is true, what they're saying is true. Then after that, we need to understand why it is happening. That's the whole, like I would say 30-40% of solving anything. That's the most important thing. You need to understand it. You need to go deep into the concern that the observation that they are having and to get an like full in-depth understanding about it. So then you will say, okay, why this is happening? Because there are certain inconsistencies in payment of certain customers. But that if that is something we can identify proactively and we can intervene, it is something that we will be able to solve through analytics. And then the most important thing is here, again, I will mention the intervention planning, right? So let's say you are implementing model, let's say you are saying, okay, I have 98% accuracy, 99% accuracy, whatnot. The problem is, even if you have 100% accuracy, it means nothing to the business if it's not create any impact to the business. For example, let's say in this particular case, if you can identify, let's say, the policies the most likely to lapse within the course of month, then let's say accuracy is 95%, etc. But identifying that or knowing that it doesn't help if you can't convert them, right? So the most important things, again, it lies between this intervention planning. Okay, I am proactively identifying the policies which are going to lapse, but what I'm going to do about it, right? Or what the business can do about it, and how, at least let's say 30-40% of this particular policy, can I convert into active policies? That is the real game is going to be. Again, it is important to have the analytical solution to proactively identify, but again, it's more important to design proper intervention planning to make sure the insight that you'll be getting from the analytical solution can convert it to a business impact, right? So that is why when we come to a particular, analytical concern or sort of business concern, when it time to solving these things, compound going to be really important. Then again, insurance. So you guys understand, right? Because you are coming from a educational background related to analytics. So let's say I'm talking about let's say the bias, or let's say any modeling we have, classification, regression, or whatever. You also understand the prediction, what error means, you understand, etc. Go to an insurance company and talk about these concepts. They know nothing about this, and it is really difficult to even convince them, or let's say give the proper understanding about what it exactly means, because it's a language that they don't understand. So that is why the last stage of any solution that we do in any problem that we solve, this last piece we see it, that's called pilot designing. There what we do is they have this business as usual way of operating things. Then you have this analytical solution that you have implemented, which alter the business as usual. It will have a set of nuances to that, let's say change management, or where they interacting with the customers, like there will be certain angles that we'll be looking at, but you will be alter the business as usual. So what we do is normally is you like in the dimension, we take two groups as the treatment group and the control group. Control group will give the business as usual, and the treatment group we use the analytical solution and apply whatever and apply the entire solution. And will eventually what we'll be looking at is not the accuracy of the model. We're looking at the financial gain from those two groups. What sort of additional financial gain that we were able to see from the treatment group compared to control, right? That's is something that they understand. Okay, we have two identical groups, and one we have run business as usual. Other group, they have implemented this analytical solution. Eventually, after let's say 6 months, what we are observing is our treatment group for the analytical analytical approach has, let's say, 30% uplift compared to the control group. That is a knowledge that they will be able to gain from the pilot designing. Not only a knowledge, but also that will give a confidence to them to go with this particular solution and do whatever necessary changes to their business way of working, etc. That is why I think I just wanted to reiterate on those few things in order to make sure that you need to understand it is not whether you have, world most perfect model. It's not like there are like a lot of component, like, intervention and pilot, and all of these components need to, band together in order to get a better business outcome. Otherwise, for the business, it does not going to matter, right? If you're working on a research project, I can understand going from 90 to 92% even, or let's say 91% to 91.5%. It is a huge thing in research industry. But when it comes to application, or, in terms of business industry, what matters is not that particular accuracy gain that you will be getting. What is what is the equivalent gain that you'll be getting from the in terms of rupee terms, or let's say revenue terms, and etc., right? So having said that, this is, sort of like, some sort of architecture, uh, maybe some sort of a, problem solving method that you can apply, or the component that you can break down when you are getting a business concern, or when someone come to you, okay, hey, I have this particular observation, what I'm going, can you help me to, improve this, and etc. So, and also in the operational processes that we had this, one process from connecting to sorry, finding a customer to selling a policy. And here they are, in their touch base on few things. What are the analytics that projects that we can do? It doesn't stop there. When it comes to the claim, you can go to the claim prediction, because there are a lot of frauds happening in insurance industry. People, make fake claims. You need to understand, sorry, identify, you need to investigate them. So they spend a lot of effort and money, to identify, what are the fraudulent activities that they have. And also processes, also it's not that rigor, I would say we can improve there. And also nowadays we mostly talk about, this generative AI applications. So insurance industry is also a place that you can apply those things, especially Indeera was talking about underwriting, right? What is underwriting is, when you do a financial need analysis, you will come up with a quotation. So underwriter need to to, you know, do a risk. There are like a lot of steps that need to do by the underwriter. Underwriter is who is the one, evaluate what sort of a premium that to this particular person can have. Why? Because of it different. Even let's say myself and let's say someone, equal to my age, a male who lives in, let's say, this particular area, apply for the insurance, our premium could be changed. So it's purely depend on the risk associated to me and what, how underwriter sees me. So again, when it comes to the risk, you can do, I mean, predictive analytics help a lot, to identify risk. They can look at like medical histories and whatnot, to make sure what sort of risk category that I'll be falling in, etc. And also, if you look at in the touch base on marketing things that we can do, how we can, exactly go behind certain people where the conversion will be much more higher. And again, so I was talking about this the generative AI application. Maybe you don't need to in future we might not require the agent to, talk to a customer and sell a policy. We can have a bot simply handle everything. So there'll be sort of lots there will be lots of nuances also associated this particular industry. But one thing that I would do like to highlight in whenever that we are working on financial industry, financial, like either it's a fintech, either it's let's say banking or etc., like or insurance, so to say. These are very sensitive information from the about the customers, right? So, and there will be certain regulation also associated with these industries. Um, so we need to be very careful how we treat the data, because anything related to customer, we have to treat them very sensitively. And also the one of the most important factor you need to keep in your mind is that the bias is, very key component in financial industry. You can't have bias in your models. So it is really important because bias creates discrimination, and then it become, like very questionable why this is happening and etc. Uh, and that's just take that also in consideration when in future if you are working on either insurance or financial institutes. Just keep on that also in mind, because if you, let's say, if you put, um, I'll take an example, right? Let's say you are doing a recruitment project, and when you analyze in the historical data, what you also identified is gender plays a major role in terms of becoming a good recruitment, right? Now, if you put that and if you give that particular insight to the business, so they've stopped hiring females, or let's say stop hiring males and etc. Okay, that is a very tricky situation, because it creates a gender bias, and it become a very complicated. You will be in a very complicated position, and company will be in a complicated position to answer a lot of regulatory questions, right? So, and there will be certain industries these things might not be a problem, but in financial industry, it's a big concern also. These are the few things that we wanted to share today. But if you have any question uh, about the content that we have shared, or anything related that you would like to know about the industry, or I also share some link in the chat. You can go through those links also. But if you have any question, the floor is yours. Just ask. Just one question for the organizing committee. Have we given the final problem, or this we haven't? We are yet to be the problem is yet to be given.
Yeah, problem is yet to be given actually.
Okay, and this is the the all the groups that will be working on the final day.
Actually, we have like 90 groups and around 200 participants.
Okay. Okay, this is you haven't filtered, or you have chosen like or filtered out certain groups, right? Yeah.
No, no.
Okay, cool. Check chats. I think we don't have any question. You need any 1 or 2 minutes, or can we wrap up the session? Shall we wrap up the session then? Yes. Thank you very much for everyone who has joined, and hopefully that I hope that we have provided some background about the insurance. Also, we wish you all the best for the hackathon. Hope everyone can win. Thank you very much. Have a nice rest of the day.
Yes, thank you, sir.